If the seller paid closing costs for the buyer, the sales price does not reflect the amount received for the property by the seller. Therefore, any seller paid concessions will be adjusted out of the reported sales price. The bottom line of the grid contains the adjusted sales price. The sales price of the comparable sale is adjusted by the net adjustment calculated above. This results in the adjusted sales price of the comparable sale. The appraiser then considers all three adjusted sales prices when deciding upon an actual appraised value based on the market approach. The net adjustment percentage and gross adjustment percentage for each comparable sale is also listed. The net adjustment is found by dividing the net adjustment by the sales price of the comparable sales. If the comparable sale sold for $100,000 and the appraiser adjusted the comparable $10,000 upward for an adjusted sales price of $110,000, the net adjustment would be 10%. The gross adjustment represents the sum of the absolute value of all the adjustments divided by the sales price of the comparable sales. Let's review an example. In our previous example, the original sales price of the comparable sale was $100,000, and the net adjustment was $10,000 upwards. In order to calculate the gross adjustments, a detail of the $10,000 adjustment is also necessary. Let's assume the appraiser adjustments are as follows: plus $5,000, minus $3,000, and plus $8,000. You will note the net adjustment is still plus $10,000. If you change each adjustment to the absolute value of the adjustment, you simply remove the sign. The adjustments would then be $5,000, $3,000, $8,000, which totals $16,000 when added together. The $16,000 total of the absolute value of the adjustments represents the total gross adjustment. If you divide the gross adjustment by the sales price, or $16,000 divided by $100,000, you obtain the gross adjustment percentage of 16%. Fannie Mae guidelines state that the net adjustment should be less than 15% and the gross adjustments should not exceed 25%. If the adjustments exceed the guidelines, the appraiser must explain and justify the deviation. This section of the appraisal contains some important disclosures by the appraiser regarding his research in connection with the appraisal assignment. The section also contains important information regarding the sales history of the subject property. Over the past several years, the sales history of property has become increasingly important. As property flipping becomes more popular, lenders have started incorporating seasoning requirements into their underwriting guidelines. Flipping is defined as purchasing a property and then reselling the property for a profit. While the concept itself is not illegal or fraudulent, flipping has been the tool of choice for many people attempting to commit fraud. Many lenders now require a seller to have owned a property for a certain period of time before the lender will finance a purchase for a new buyer. This section of the appraisal is where the sales history of the subject property is disclosed. The appraiser is required to research the previous 3-year sales history for the subject property. If the transaction is a refinance, many lenders require the borrower to have owned the property for 1 year if the borrower is asking the lender to use the appraised value rather than the sales price to calculate the loan amount. This is especially true if the borrower is requesting a cash-out refinance. The appraiser must also report the sales history for the properties used as comparable sales. This section also gives the appraiser the opportunity to explain any of his adjustments or decisions in the appraisal. And finally, this section contains the value the appraiser decided upon as a result of the comparative sales analysis. This section of the appraisal contains the actual appraised value of the property. If the appraiser chose to use any other method of appraisal other than a sales comparison or market approach, the approaches are reconciled in this section. A final opinion of value is set forth. In this section, the appraiser also reports whether or not the appraisal is subject to any repairs, or if the property is subject to completion. If the condition of the property was such that the appraiser required repairs to be made, the appraisal would be made subject to the repairs. If the property was under construction, the appraisal would be made subject to completion. In either case, the appraiser will need to re-inspect the property to verify that repairs were made or that the property was completed. The appraiser reports the re-inspection on form number 442, which we will review later. The bottom of the second page also contains the effective date of the appraisal. Appraisals are usually good for 4 months from the time the appraisal is completed. Some lenders will only require minimum documentation to update an appraisal, which is more than 4 months old but less than 1 year old.